Hello, welcome to the SABEW conference and our panel on cryptocurrencies and NFTs. I'm Oliver Staley, the Business and Culture Editor at Quartz. And on behalf of SABEW's Board of Governors, I'd like to thank our sponsors, exhibitors, and the conference committee for making this program possible. I'm very pleased to introduce my former Quartz colleague, Joon Wong, as our session moderator. Joon's a founder of the Association of Cryptocurrency Journalists and Researchers, and it's safe to say he's forgotten far more about crypto in that world than I will ever know. Joon, if you could introduce our panelists and take it away.
Hey, thanks so much, Oliver, and thanks to SABEW for having us. We have a wonderful panel today. I'm just going to do a very brief one-line intro for everybody, and then we can get started. So we have Christine Moy, who is the head of Liink at JPMorgan, and Liink is I've heard it described as a swift killer, although she may differ on that characterization, but it's a messaging system that's built on a blockchain. And it includes, 400 banks and financial institutions within that network. So it's a hugely interesting network. Next is Camila Russo, who's founder at the Defiant, which is probably one of the first dedicated publications to cover DeFi. Decentralized finance, and which continues to grow, I think, from strength to strength. So if you need to know about DeFi, definitely check out the Defiant. Last but not least, we have CZ, who is the founder of Binance, the world's largest cryptocurrency trading platform, and a lot more besides. Like Binance does many things, but trading billions on a regular basis, and probably somebody with one of the most wide-ranging views, I think, on what is happening in crypto today. So that's the panel. I'm Joon. I started ACJR. Come and talk to us if you want to learn about covering crypto. We were founded by journalists and researchers with many years of experience in the space. I started covering the space in 2013 at CoinDesk and later at Quartz. Awesome. So, I thought for this panel, we've got a lot of ground to cover. So I broke it up into 4 themes, and we'll organically flow between them. One is, let's talk about this cycle compared to previous ones. 2, a little bit about DeFi. 3, everyone's favorite topic, NFTs. And then finally, I thought we could, given our audience, we could talk about how the media covers crypto and what we think about that. So I guess let's kick off with the hottest topic, which is, this time is different, or is it, right? How does this market cycle compare to, let's say, 2017 during the ICO boom? What's changed or what hasn't changed? I might kick off here with Cami, and then we can go in turn from there.
Sure. Thanks, Joon, and thanks, SABEW, for having us. So I was covering 2017 ICO boom at Bloomberg. So writing about what was going on in the market every single day, and I'm covering what's going on in this market every single day for the Defiant. And this time definitely feels different, though I think every cycle does in its own way. But I think this time I think it's very clear there's something real there. There's a there in blockchain tech. I think in 2017, it was a lot about the huge potential everyone was seeing in blockchain technology and what cryptocurrencies could potentially do. A lot of promises in white papers, a lot of kind of empty websites, and token sales with no working product or protocol or app. But now it's different. I mean, there's actual working protocols with users transacting real value. There's 80 billion locked in decentralized finance applications. And you can actually do stuff. You can put your crypto to work beyond speculating on casino chips that go up and down. You can, lend your crypto, you can borrow, you can trade on decentralized exchanges, you can trade on margin. The space is getting increasingly more sophisticated and useful, like actually useful. So I think that's very promising.
Christine, do you have thoughts on the market? I know you're a little bit, tangential to the market.
Oh, yeah. I mean, definitely not tangential at all, but I'd love to share the institutional perspective. So, obviously Bitcoin was created out of the ashes of the financial crises of 2008. But for a very long time, like people didn't except for the people who were really committed and who had discovered it early, the general mass public didn't really know about Bitcoin, didn't really pay attention to it. But what a curious thing happened in the bank and institutional space around 2015, 2016. Suddenly there was this interest in, as Camila mentioned, the underlying technology of blockchain and what could the possibilities of blockchain be in the institutional space. Like if it was able to enable this 24/7, 365 digital currency, like what could banks do with it? And so there was sparked a narrative or kind of like a saying like blockchain, not Bitcoin, like for a few years. And this is where a lot of experimentation and enthusiasm started with banks like JPMorgan, amongst others, where essentially there was a lot of use case development. What might we do with blockchain? Can we enable faster settlement? Can we reduce reconciliation? The antithesis of what Bitcoin and decentralization and cryptocurrencies were really about. Instead trying to co-opt the technology to essentially make more efficient processes and do cost savings. And so that narrative was driven for quite some time, and it had its own hype cycle. Like in 2015, 2016, it was like every other week was a press release about some bank doing some like proof of concept with blockchain. But then suddenly in 2017, like 2016, 2017, an interesting thing changed where not only did the Bitcoin and general crypto prices increase, then there was this phenomenon of initial coin offerings where people were able to use Ethereum technology to essentially do capital raising, raising funds from hundreds of thousands of people around the world in the span of minutes, in the scale of hundreds of millions of dollars. And, with this quick price action plus this ICO boom, suddenly the institutional space was like, what? Like, I thought the jam was blockchain. What is this crypto stuff? And so there was a lot of interest suddenly, not only on blockchain, but on crypto. However, what happened was that, quickly soon after, with regulatory guidance, initial coin offerings ended up getting deflated and sort of got transformed into what we now know as security tokens. And then unfortunately, the Bitcoin price, along with crypto prices generally, kind of what sunk into crypto winter. And then furthermore, all of the enterprise blockchain projects that we were working on essentially went through what I would call, like from a Gartner cycle perspective, the trough of disillusionment, where we were trying to cross the chasm from like proof of concept to like real deal, like enterprise grade industrialized technology. And so it just went quiet for like a few years. And I even remember like people calling and saying, do you need a new job? Like, is blockchain and crypto over? But what actually happened behind the scenes for those few years is that those that were truly committed, both on the public blockchain crypto side and on the institutional enterprise blockchain side, we just kept on building. We just kept on going. We were like, we don't know when this is going to come back, and maybe this is bogus and impossible. We're going to keep fighting, and we're going to keep making this thing real. And so what you're seeing now in 2020 and 2021, where you have this price action in cryptocurrency, which, I'm sure ZZ can, elaborate on, but also a lot of or at least JPMorgan's enterprise blockchain projects like JPMorgan Coin, intraday repo, Liink, a number of other things are totally live now. Now like we've like basically crossed like the chasm of like the challenging time in both crypto and enterprise blockchain, and they're now experiencing what we started to experience in 2017, but that the infrastructure and knowledge base could not support. So I would say like, at least from my perspective on the institutional side, like now, like no one's caught off guard by crypto and blockchain. Everyone is mostly better informed about, what's what technology versus the asset class. Infrastructure has been built up and industrialized. And then furthermore, there's been better regulatory guidance globally And so, I'd say that at least in this case, in my impression, this cycle is more sustainable than what we saw in 2017. But I'd love to hear the other panelists' thoughts. But that's been my purview from the bank side and institutional perspective.
Yeah, fascinating. Over to you, CZ.
Sure. I think I think I echo with very much with what was said, what Camila and Christine already said. I think from our perspective, it's much bigger. I've been involved in the industry since 2013. So I saw the first cycle going to 1,000 in 2013, Bitcoin price. And then in 2017 went to 20,000. And then now we're in 2021. So we actually go through a pretty unique, pretty clearly identifiable, I'm not sure it's repeatable, 4-year cycles. There's a lot of things tying us to 4 years. The Bitcoin halving is 4 years, stock markets go through 4-year cycles. But for Bitcoin, every cycle, at least for the 3 cycles I've seen, each cycle is much bigger than before. So we see this most clearly in terms of number of users. So in 2017, the peak all one day all-time high new user registrations for us was 300,000 in 1 hour. But that was the only hour that was available for registration during that day. So we got 0.3 million users within 1 day. Now we're way above that every single day, and it's sustaining. So the number of users coming is so much higher than in 2017, even at the peak. And this is reflected in the Bitcoin price and everything else. I think some of the other things that was mentioned before, such as 2017 was just ICOs, really. It was, okay, now we got blockchain fundraising. Anyone can issue a project and raise money globally, and that's great. And Binance became successful because of that. But now we got DeFi, got NFTs. We have a lot more use cases. So that's on the technology front. On the user adoptance front, now we have celebrities endorsing it. We have athletes endorsing it. We have Elon Musk endorsing it. We have a number of really much higher much more famous people endorsing this publicly. So this didn't happen in 2017. And we now, in addition to use cases, we have meme coins taking off. So we have multiple crazy things going on right now. So I think, and also like we have institutional adoption going really strong. I think JPMorgan was one that's kind of sustained, but now they're taking this in a much heavier way than before. We have like MicroStrategy coming into crypto in a big way, and they just buy and they just hold. So we have a lot of this. Now we have Twitter, Square, many other companies coming into this industry. So overall, the simplest thing I would say is this cycle is right now is just much bigger than 2017, and 2017 is much bigger than 2013 in terms of not so much in price, well, also in price, but from our perspective.
Point, but I feel like in this cycle, I think it's pretty confirmed that like crypto is here to stay, and it's already the mainstream, right? It wasn't quite certain like in 2017 that it was, but like a few different steps, you mentioned the institutional, like obviously PayPal, Square, et cetera, giving access to consumer clients, along with others like Revolut and some of the neobanks. You hear some of like our colleague banks, kind of like offering, giving crypto fund offerings, like kind of feels like it's here to stay. But I mean, from your perspective, is that any different than how you saw 2017?
Yeah, I think for most people, for the majority of people I speak to, because now the majority of every cycle, the majority of new people are new. So every cycle there's 5x, 10x, 20x new people. So for the majority of people I speak to now, they do accept that, whereas before there's a less number of people. But for the guys who have been in the industry since 2014 or 2013, I always knew crypto will stay. I knew Bitcoin's not going away. So I never had any doubt. So I think I have a personal different view than what the mass people thinks. But I do agree that now, at least on Twitter, when Bitcoin price drops, it's just a bad day. It's no longer like, oh, Bitcoin's gonna die again. So that narrative, somewhere in between, the narrative stopped. I don't remember exactly when. I think even 2018, 19, we still hear that. But now, at least, right, I think, but also right now we're in bull cycle, I think. So we don't hear that very much.
Yeah, and to be clear, I never thought it was going away. Like, I'm just saying, like, in terms of the overarching mainstream feeling of whether or not this is accepted in the broader space or not.
Yeah, I'm curious, how do you guys think this cycle ends, right? So the 2013 cycle was ended, it was linked with the Mt. Gox hack and collapse. 2017, it's not entirely clear there was a single catalyst, right? Maybe, I mean, there was just a lot of capital raised, I guess. How do you all think this cycle ends? And if you like, make a prediction for when. Open to the floor.
And by the way, I think 2017, I think that's slowed down a little bit because there was all the capital formation and people got very enthusiastic. But then there obviously needed time for a lot of those protocol projects to develop. So, you know, I think generally people were like, oh man, I bought these tokens, but like now I have to wait for the technology to get built. And then, you know, separately after that, there was a lot of regulatory guidance around like, are these tokens securities, yes or no? Are these projects getting in trouble or not? Like because of, you know, not properly registering as a security or properly being exempt. And I think that deflated a lot of the enthusiasm around the capital formation part of it.
I'll take a crack at it. I'll go first. So the answer is I don't know. I don't like nobody knows how it's going to end. Predicting the future, even the short immediate future, is really, really hard. I do have a guess on 2017, 2018, the bull market ending. Our system couldn't handle it. If that didn't end, like there's no way to register more users on our system. So I think probably other exchanges are probably facing similar issues back in 2017. So we actually got breathing room for a few years to revamp it. So now we can handle sustained user registration at a much higher volume. Maybe you'll hit our limit again, but I hope we will not be the limit. I hope we were not, and we will not be the limiting factor. But you know, these cycles are very hard to predict. But right now, I think we do see a lot more innovation, and we do see a lot more users come in, and we do see performance improvements in the system in the ecosystem for various different projects, including like DeFi, smart contracts, etc. So we're working really hard to just enable that growth. Hopefully we will not be the limiting factor for it. But where it's going to end, nobody knows. From 2013 to 2017, that's a 20x increase, and we don't know where this one is going to be. So yeah, anybody's guess is good.
Yeah, and if I could add, like, I just don't think it ends, right? Like, you know, at least for us blockchain nerds, we always think about sort of what's going on in both the blockchain and the crypto space as the next internet of value, right? Like we thought of sort of the internet that we know and love as the internet of information. And that obviously disrupted an incredible number of businesses, enabled a whole swath of new businesses and business models that we could not have imagined before when we were just thinking like, let's figure out how to put New York Times on like the web as an example. And, you know, there were boom and bust in that technological cycle as well. But it just never stopped. Like the innovation, like actually the boom and bust was just part of the innovation cycle. And that was sort of like how, you know, the wheat like separated from the chaff, and like how some of the larger companies like emerged from those boom and busts and from all the lessons learned. And so, you know, I kind of see this similarly in the crypto and blockchain space, where a lot of enthusiasm, a lot of investment, a lot of projects, not all of them make sense. You know, maybe they'll go away. They'll be like a so-called like bust, but then emerging from those lessons learned will be the next generation of companies that will be the most important ones for this transfer of information, transfer of value, just in the same way that we have the internet, which is the transfer of information.
Oh yeah, I totally agree. I love that way of looking at things. Like this never ends. I agree that you know, like blockchain, crypto is here to stay. I believe DeFi is the future of finance. Like this is just not going away. And it will be a continuation of innovation and building. But I think that's different from kind of the price cycle that we've seen before. I think it's something that, you know, it's really well studied. It happens in all markets, obviously not just crypto. There's this like I think kind of like the book on financial bubbles, Irrational Exuberance by Robert Shiller kind of describes this phenomenon really well and studies this across asset classes. And you pretty much see it play out really well in crypto, which is, like people start looking at actual like fundamental value. They start buying into that, betting on that kind of future, becoming more optimistic on a sector, telling friends about it, more friends join. Then like suddenly these things start making the headlines and more people join. And then it starts to become about, oh, I heard someone else buying crypto. I'm just gonna buy because it'll go higher. And then it starts becoming about like, I'll buy because I think it'll go higher than, oh, I'll buy because like I find this useful and this is like something that I enjoy like using. And it kind of like starts escalating from there. It's like more headlines, more buzz, more people buying because it goes higher. And then it comes to a point where like prices simply are very detached from reality. And I don't know like at what point in that cycle crypto is in right now, like how far from like fundamentals or realities crypto prices are. I think like just from like anecdotal evidence, I see some similarities between what's going on now to like what was happening in 2017. So to me, it does make sense that like same as it's happened in crypto, same as it happens in every other asset class, there will be a point in time where like crypto prices become detached, and then maybe there will be a correction. But in a overall like longer term upward, slope, upward trend that like just follows innovation and just like as people keep building.
This is a good segue to DeFi. I'm guessing like an explanation of what DeFi is useful at this stage for our audience. So I don't know, Cami, you're the expert on this. Do you want to take a crack at that?
Sure. So DeFi, decentralized finance, is the ecosystem of financial applications that's being built on top of public blockchains like Ethereum. And so what's exciting about this new financial ecosystem is that unlike traditional finance, it's global and it's open to everyone. So for the first time, anyone, anywhere in the world is free to access financial services that they just couldn't before. So that's to me the most exciting part. And then like the second part is that because you're interacting directly with smart contracts and removing so many intermediaries, it's just a better financial system. It just works better. It's faster, it's cheaper, it's more accessible. So that's why I really think it's obvious that DeFi will kind of continue taking market share from traditional finance because it just works better.
So, one of the things we can do on DeFi is you can swap coins, right? So you don't need to go to a centralized exchange. And I guess the question to CZ is, in the world of DeFi, right? What's the role of centralized platforms like Binance?
I think, well, in the extreme case, I think the centralized exchanges will be just turning into a fiat on-ramps for DeFi. So I'm okay with that.
Yeah, that's a great role to be playing. But then Binance itself is now involved in DeFi in lots of different ways, right? Maybe you can tell us a bit about that.
Sure. So we funded the Binance Smart Chain. That's why it's called Binance Smart Chain. We helped bootstrap it, but we actually didn't really do a lot of the heavy lifting of development, coding, etc. So, but it's engineered very, I think, very elegantly. Many people may not agree with me. It's 100% Ethereum compatible, so you can easily port Ethereum Solidity smart contracts onto Binance Smart Chain. And it has higher capacity, thus have lower transaction fees, very, very much lower, like 35 times lower. So with this, we actually have seen that the number of transactions on Binance Smart Chain for what the largest DeFi project, Pancake on Binance Smart Chain is doing more transactions than the Ethereum network combined. today. So and the Binance Smart Chain ecosystem is handling somewhere around 4 to 5x of Ethereum's transaction volume. So we don't own it, but that network uses BNB to pay for network fees, pay for gas fees, which is great for us because we still, well, both myself individually and Binance as an organization holds quite a bit of BNB. So we benefit from that perspective. So, but we don't own it. So, but this is so we are a contributor in that ecosystem. And there's actually many other DeFi projects which we are sponsoring, helping. We have a $100 million Binance ecosystem fund, which just give out grants, not huge tickets, but small tickets like 50K, 100K here and there. And those are grants. We don't ask for equity. We don't have anything in return. So we just want to help grow the DeFi ecosystem. And to my earlier point, I think if anything's going to disrupt Binance, the CEX, we want to promote it. We don't want to fight against it. I think this is a case where I'm always advocating for traditional financial service providers to adopt cryptocurrencies and to embrace the new technology, new innovations. And I don't want to do that to DeFi, or I don't want to be fighting against DeFi. We want to do the same thing. We want to adopt and embrace new technologies. And I also believe that in the newer technologies, in the future world, there's more opportunities for growth. There's more opportunities there than today. So even if it completely cannibalizes the centralized exchange, we'll find something else to do, which will be more impactful, more hopefully beneficial to everyone, and we will get rewarded for it as well. So there's no lack of opportunities in the future, so we're not really worried about it. So I'm actually really seriously okay with the centralized exchanges just become fiat gateways to the DeFi world. With fiat, most DeFi can't handle it because they don't have bank accounts. So I'm okay with that, and we'll do something in DeFi at the same time. Hopefully, will be equally or more meaningful than what we do in the CeFi space.
Yeah, and if I might add, from like the bank and I guess what we call traditional finance, the TradFi perspective, at least banks like ourselves, JPMorgan, we're spending an enormous amount of time and effort studying DeFi. And perhaps not all the banks are, but we are, because we have like a longstanding blockchain crypto program from 5 years ago. And we find DeFi to be incredibly exciting. I think that what's like from our perspective, you take these like what we so-called like traditional financial products, and that we know and love at the bank on the trading floors, that we structure, that we basically issue for our clients or trade or kind of use as collateral in traditional settings, as an example. Essentially, what we're talking about is a number of protocols that enable us to take these generally complex financial instruments and break them into like what people will call like financial Legos, or like from a technologist point of view, microservices, right? So like essentially like just like these little snippets of code that do like certain things. But if you're able to like combine them in new ways, like essentially like you're able to accelerate the development of new financial instruments, new financial products, basically offer more customization to clients or scenario or deal, as an example. And in fact, if it wasn't for the financial crisis, I would think that banks would be, like all over, DeFi, as they've always been accustomed to being interested in structuring that next financial product, as an example. But, given sort of where we have like been and sort of how we've recovered, we have a very strong like risk mitigation like sort of point of view, and like need to make sure like everything that we're doing is safe and responsible. And, I think a lot of work needs to be done in order for banks to get comfortable, interacting with the public blockchain. But overall, like, some of the things that Camila mentioned are like spot on the most exciting things that we've seen. Like, for example, like what she mentioned about a smart contract essentially being an entity, serving as an entity. Smart contract is like a snippet of code. We're saying like a few lines of code can basically be your collateral agent. A few lines of code can be your escrow bank, and essentially can take the rules of a contract or rules of commercial agreement and execute on it, and enforce on them, like, and do the value transfer automatically. That's super exciting. At a bank, like typically these are full operational like systems and teams that have to do something as simple that can be handled by a few lines of code in DeFi. The other thing that's incredibly exciting is the wild innovation that's happening in the open, right? So like historically, technological innovation happened behind the closed doors of the secured labs of like tech companies and banks. And it was like, this is our intellectual property, like this is what we're working on, it's secret, and like, you know, it's our competitive edge and we're not gonna share it with anyone. Now we have this cultural shift paradigm where all the information is happening out in the open. It's all open source code. And as a result, in DeFi, you even see like projects like, oh, I'm just gonna copy like this Uniswap like code base and like change the name and like add some other things and like make it competitive. And like suddenly we got a new project. This wild innovation that's building upon itself in the open that is unbridled on one front, you know, sort of like a collaboration or like competition on another front. And the key thing is that it's using real money, as Camila mentioned, billions of dollars being used as collateral in the DeFi space. So like, you know, I think it's incredible how exponential the innovation that will come from DeFi from this combination of open source, collaborative, competitive, like sharing, plus like wild experimentation with real money, as far as I can tell. So we're closely watching the space and doing a lot of work in that area. So stay tuned.
So, yeah, no, I mean, for folks watching this who are thinking of covering crypto, I think, you know, DeFi is definitely the next sort of big story that's bubbling up to the mainstream. It's an alpha leak, as we say on crypto Twitter, to cover DeFi. So time flies. We're into our Q&A portion now. While we let questions trickle in, I wanted to ask you guys a question about crypto coverage. How do you think, you know, sort of the mainstream media coverage of crypto has gone this cycle? And maybe I'll start with Cami, since, you know, you're a journalist. Do you think are we retreading the same old narratives, answering the same old questions, or sort of has coverage moved on a little bit, you think?
I find mainstream media coverage of crypto to have improved from 2017. I think journalists are more knowledgeable this time around. I think maybe kind of journalists who were just learning what crypto is in the previous cycle have stuck around and like are better prepared to cover the space this time. So I do see just, you know, better stories, more in-depth coverage, stuff that goes beyond kind of the price swings. I've seen mainstream media like jump on like maybe kind of new trends faster. Like Bloomberg was covering NFTs like pretty much as soon as like the thing started taking off. I think mainstream was a bit slower in the previous cycle to jump on those sorts of trends. So I think it's encouraging. I still would wish that that mainstream media had more specialized coverage. I still think it's like, oh, like you know, prices are rallying, let's write a Bitcoin story, and then like we'll forget about it, like, you know, once the cycle is over. I think that needs to change, because in the same way that, you know, A16Z had this famous saying that software is eating the world, I think crypto is eating the world. I think crypto and blockchain will just start to seep into every single industry, so that it's not like you'll have like one crypto journalist who can cover everything. I think every journalist will have to be equipped to talk about and be knowledgeable about crypto, because it'll just, you know, start to become part of everything, of every single industry, not just be like this siloed weird thing that you cover once in a while. So I think that's kind of the next step.
Yeah, that's interesting. And, you know, covering crypto is notoriously difficult, right? You're dealing with pseudonymous founders. You have to know something about monetary policy one day, in theory one day, and the next day something about cryptography. So just super multidisciplinary. So on the source side, you know, CZ, what do you think? You've been through, you know, 3 cycles. What's your opinion?
I think the coverage has definitely got a lot better. I think in 2013, no one covers us. So the mainstream media there's no coverage. That's probably worse than bad coverage. I think in 2016, 15, 16, 17 was like, okay, drug lords use, Bitcoin is used by drug lords. It was kind of that kind of narrative. And all the exchanges are running illegal stuff. They're unregulated, etc. And I think in 2018 was the first time I got invited onto Bloomberg doing live TV, and then later on to Forbes. But on the Forbes, they called me crypto overlord. So like this is on the cover of Forbes, right? So, or at least they put me on the cover, which is nice. But now the narrative. Well, number one, today we get a lot more coverage. We get at least I get a lot more inquiries from journalists asking about questions. Some of them basic, some of them are not. And the narratives have changed to be much more positive. So they're no longer viewing crypto businesses as the outlaws, etc. So now that narrative is changing, which I think is very, very beneficial for the industry. It's dangerous or overgeneralized. There's always the bad apples in a basket. So there are some, once in a while, you get a journalist who does not know what they're talking about, writing what we call FUD, just fake news, etc. So that still happens, but I think it happens in traditional industries as well. So it's not crypto specific. But overall, though, I think the media coverage has gotten a lot better over the years.
Yeah, and if I might add, from my perspective, I think I agree that the coverage has been much better. I think that there's an opportunity to kind of offer like more nuanced coverage of, what's going on in the space as it relates to, as I mentioned, TradFi and like DeFi or like, banks versus crypto. And it's typically like kind of positioned as, kind of adversarial, and it's like, only like one side is going to win, who's going to win. I mean, but in reality, as I mentioned at JPMorgan, we've long been investing in the space. I mean, as an example, like 4 or 5 years ago, we were one of the first banks to interact with public Ethereum. We actually forked the public Ethereum code base, added privacy and performance, and open sourced it for the world. It's called Quorum. We were one of the first companies to partner with the Zcash team to experiment with zero knowledge proofs. This was even before anyone was thinking about doing it in like the public Ethereum space, as an example. And even most recently, we tested tokenized payments, basically ran an Ethereum blockchain across multiple satellites in the middle of space. So, I think that, JPMorgan and banks like JPMorgan have been investing millions of dollars in this space and in this technology. And, I think that like there's positioning of like blockchain is not the same as crypto, and they're two different things. But in reality, and especially for those who know the technology, the expertise and the infrastructure that you build for enterprise blockchain is totally applicable for public blockchain. I mean, the security model is totally different, like, because it's more adversarial on the public blockchain side. But if we're talking about key management, running nodes, like, basically structuring tokens as an example, it's all transferable. So, at least for my part, it would be nice to like see more nuanced coverage of the fact that institutions are helping to drive the progress of this technology and the broader cryptocurrency space in their own ways and in the ways that they can.
Yeah, no, that's an interesting take. We have a couple of questions from the audience. We're running out of time, so I'm just going to direct a few questions, and then you guys can just answer, okay? So Sophia Steiner asks, what is the panelists' view on NFTs and the directions for how NFTs will evolve as a tool when the current hype is over? And then the second question, I think probably Cami should take, CC Rogers says, even if you have the source code and collateral, who or what does the due diligence on the quality of the entity behind the code? So fire away.
Camila, you want to take the source code collateral thing first? Because that's an NFT specific one.
Sure. Okay. And hi, CC. We go way back from mid-deal. So yeah. great to see you. So who on the smart, sorry, let me read that again. Who does the due diligence of the quality of the, okay. So with DeFi, you are basically, your identity is your wallet. And it's your Ethereum address, and it's the assets inside your wallet, or like that your address is holding. And you're interacting directly with code. So there is really there's no credit score, there's no information or data or anything that any entity is checking. It's really, a computer program that is running and that checks, oh, does this address have enough funds to take out whatever loan that it is asking for. So loans in DeFi are over collateralized. So you need to put up collateral to borrow. And your collateral is, basically kind of your way of or it's the protocol's way of keeping the loan sound. And making sure that when there's fluctuation in prices, you can still pay back whatever you borrowed. So that's basically like all the checking there is. It's the computer program running to verify that your address holds enough collateral to take out that loan, and it happens instantly. Like it's nobody asks anyone for permission. If you have the funds, you can take out the loan. You don't interact with a single human being. It's all based on computer code. And that's kind of the current state of DeFi. It's all collateral based. The next step will be to create decentralized identity so that it's actually possible to one day take out under collateralized or loans without collateral, but that's still kind of in the works right now.
And if I also might add, like at the code level as well, some of the more responsible teams will definitely get each line of code checked by a security, a smart contract security specialist and auditor. For example, Trail of Bits is a company that's well known in the space where they'll actually, audit everyone's smart contract code. Over time, we have learned that there are certain patterns of smart contract code that can open up vulnerability or, is a bug or can basically, risk funds. And so specialist firms like them are often commissioned by project teams to review code and make sure the code itself is of high quality to the best of what we know of today. I mean, as I mentioned, there's so much rapid innovation, everyone's moving so fast, like there's bound to be things that we don't know about. But that also adds a check on the actual code base itself.
I'll add to that a little bit. There's actually hackers paid to do that as well. Everybody's paid to do that because in most of the DeFi pools, there's billions of dollars. Whoever can find a security bug often walk away with millions of dollars already, and that's the way to pay them to check. And for that reason, for the newer smart contracts that's coming out, be very careful because those are not tested through time. For a very popular, slightly longer term standing DeFi project that holds like say for 10 billion of total value locked, there's $10 billion of incentive for people to verify those. And you can be pretty certain that a lot of hackers have looked at it. Not to say it's guaranteed to have no issues, but like the crowd is incentivized to look, and there's enough people in the crowd who are technical, who are incentivized to look at those. And so that's a third way of crowd verifying. And there's very real financial incentives on that. Again, that's not real financial incentives. When that happens, it's a hack, but the economics there totally work. And they are probably much better audited than paying like millions of dollars to a consulting firm. So I'll take a crack at the NFT question that was raised earlier. I think if you look at ICOs as a way for founders to raise money for what I call blockchain fundraising, for founders to raise money globally, NFTs now offer artists or content creators a way to raise money or at least monetize globally using cryptocurrencies. So that's actually the most direct one. There's many indirect ones that we can imagine as well. Concert tickets can be issued as an NFT because each one's only available on one date in one seat potentially. There's a lot of those use cases we have not explored. So future predictions are really hard. I can't really predict which way it's going to go, but I do think the ability to allow artists to monetize their work globally using the cryptocurrencies technology that use case is going to stay. So I think, NFT is not going to go away, even though it's still early. It could go away. There's a very high chance it will not go away. Let me put it more programmatically. So that's that.
Yeah, I agree. I think, the idea of using blockchain for digital collectibles is a really sustainable, and probably one of the best use cases for blockchain as an example. I mean, with the advent of blockchain, the really special thing that was enabled was the ability to create something digital that is like uniquely scarce and uniquely identifiable and measurable, right? And you know, the analogy that everyone likes to use is like, I have a digital picture, I email it to you, now there's 2 digital pictures, you email it to your mom, now there's 3. You know, and certainly you can still email JPEGs around, but now what you're able to do with this blockchain technology, and also like kind of like the form that it's in right now, NFTs, is you're able to track the provenance of the fact that I sent it to Joon, and then like Joon sent it to his mom, and then, you know, it sent it to CZ and like Camila, like, you know, that you can follow that provenance trail to say, this is uniquely the thing that I sent. And for those of you that grew up with, you know, whether they be baseball cards or magic cards or, you know, what were they called? Like Beanie Babies. Like, you understand that there is like a culture that we share as people around collecting unique things within our sub-communities. And so, you know, it seems like a natural progression where most of our lives now are lived digitally. I mean, in fact, we're all here like as virtual people, like not real people, you know, then that basically there would be a translation to those special things, like tangible things in our real life, into digital things that are uniquely scarce and traceable.
I will add briefly that I've also tokenized myself, so you can buy my Joon tokens on using DeFi at any point in time. Just FYI.
I'm totally gonna buy it for you and post that.
Feeling Joon.
What can we do with it?
At the moment, not very much.
Be a proud owner of Joon.
I am unfortunately the bearer of bad news to say our time is up. I think we could agree that this panel could have been twice as long and still not covered all the subjects that we're so interested in crypto and blockchain and DeFi. I want to thank everyone. I want to thank CZ, Joon, Camila, and Christine for a really great conversation. And for our audience, we got a lot more coming today with our keynote speaker, Lael Brainerd from the Federal Reserve at noon. So log on to that, and we'll see you soon. Take care, everyone.
You guys.
Bye.
Bye.